October 5th, 2023. You can see we rallied into the close yesterday and then we got a pullback. This is the first push down right here, pullback, the second push down, pullback, and the third push down, and an attempt up on bar one. And what it's trying to do is create a bull flag. And it's a really important concept to understand is that, bull flags obviously either work or they don't. And when a bull flag works, so let's say we start to rally strongly, the target traders would look for is a measured move up of the bull flag. When you get a big bar like bar two, it's a big outside down bar and it flips the markets always in short. And so traders will be looking for a measured move down of the bull flag. And that's exactly where we got profit taking on bar five. So traders, you can see bar one, bull bar, bulls are looking for a wedge, but it fails on bar two. It's a pretty big failure, big outside down bar. And it's clearly always in short below two. And when that happens, traders will sell below two, looking to get the measured move. Similarly, you can see we attempted to bottom here. We tried to form a wedge again, but 13 is a potential, it sets up a low two short and a potential wedge failure at the moving average. And so the measured move traders would look for would be something like that. And you can see we never quite reached it, but that's essentially what it was trying to do. It was a strong breakout on 14 below the bull flag. And then we got one more essentially today. You have a big bear trend at this point. But if you look to the left, it's probably just a trading range, right? So this is easy to be intimidated by such a big sell-off. But you're kind of just heading right into support in the bottom of trading range. Bulls are buying, bulls are buying, bulls are buying, bulls are buying, bulls buy here. So it really just seems like you're entering the bottom of a trading range. When that happens, sometimes you get this rally, and you can see it breaks the trend line. And so when you get a trend line break, higher low, major trend reversal, the profit target for the bulls is going to be somewhere up here. Trend line breaks and higher low major trend reversals or lower low major trend reversals, so this pulling back and being down here, they're pretty reliable setups. It's probably, where is it? Trend line break MTRs. It's probably, the most reliable setup. And we got one in September. You can see we had a steeper trend line. This isn't as good of an example. We had a steep trend line break, and then a higher high major trend reversal here. Usually when you get a higher high major trend reversal, it's followed by a lower high, which is what we got here. So higher highs are usually followed by a lower high, but this is a better example. When you get the lower high, sometimes it'll go immediately. So you have the trend line break, major trend reversal 42. And these are probably the best swing trades that exist, in my opinion. Trend line, strong bear trend line break, higher low, major trend reversal. But if it had been a lower low major trend reversal, maybe we form a higher low over here from whatever this low would be. Maybe we get a higher low over here and then it reverses, which is kind of, the same point as over here. But anyways, so bar one and two, good bear bars. Or sorry, one more thing. Generally when you rally in the second half of the day after a sell-off in the first half of the day, you're not going to go very far above the high. So you can see we just kind of failed at that high, because usually when you start to get a strong rally after a big sell-off, you're just really never going to go very high above this, almost never. And so it's pretty common to see a failure there. So two outside down, breakout attempt below the bull flag, and you get follow through on 3 and 4, but there's a tail on the bottom of 3 and there's a tail on the bottom of 4. So there are problems. You need to keep in mind, traders are going to buy below 1. So are traders who bought below 1 able to get out with a profit? That should be the question going through your head right now when you see 3 and 4. 5, doji bar. Any bear who sells the close of 4 is going to be disappointed in 5, and those bears are going to buy back shorts pretty much exactly at break even. You can see during 6. Some will flatten at the market, but I think at 6 it's just caused by disappointed bears buying back shorts because they didn't want a bull doji bar. And so bulls get a good rally on bar 6, and then you get a big bear surprise on bar 7, closing near its low. What's important about bar 7 is that it didn't allow bulls to get back to the 1 low. So we have an open gap here currently. So anyone who was long, you can see, by the way, later in the day, this is where we ended up finding resistance. When you're buying down here, when you're thinking about it, it's a potential major trend reversal. So what does that mean? It means it's probably a trading range day, right? Because you're betting on a rally and this was a sell-off. And so that means it's probably going to close a fairly neutral day. And when you get a trading range day, limit order traders should get out at break even. So, your logic buying above the bar like 45 is thinking that we're going to get back to the 1 low, which we did. But anyways, So that gap being open is extremely important. You get big follow through for bears on 7, some follow through on 8, but big tail on the bottom, probably going to bounce pretty soon. Our bulls who bought below 5 going to be able to make money. You can see on 9, those bulls were able to make money, so it's not as strong for the bears. And this is important. A lot of bears will be buying back shorts, as this trades down on 10, disappointed in how, the follow through was on 9. And we traded up here, and you can see on 11, bulls who bought the low of 6 were allowed to make money on 11. And so that's really important. I think 11 is mostly caused. There's a couple things that's causing it. It's a tight bear channel down, so it's likely to get a second leg. So bears are going to sell reversals. But it's also important to note that a lot of this is from bulls selling out of longs. So bulls who were long, you can see they got out the 6th low, and that caused this. You get a good bounce on 12. If it's an inside bar, maybe you can buy, but it's not, and has a big tail on the top, so it's not very good. However, something you should note is that on a line charts only track the closes of bars. There are no tails on line charts. So if you only have the closes or the bodies on this bar, then you can see that there's an open gap. There's no overlap between these closes. What that means, essentially, I think of it as like a gap, but with a grain of salt. So it's good for the bears, but it's not as good as something like this, where just no bulls can make money. So line chart traders might still see this as an open gap, but for people who trade with candlesticks, it's not as good of a gap, and so a lot of traders will be more hesitant to sell. But it's still okay to sell 13 for a swing. It's a good trade, and you're looking essentially at this point for a breakout below the low of the bull flag and some sort of measured move down. 14, you're pretty deep in this bear trend. You could argue it started right here, and you're now 21 bars in. And you're 21 bars in, you're getting by far the biggest and best looking bar of the entire trend on 14. So that's pretty suspicious. I was short, and I just got out on the close of 14 because, well, yeah, there's probably going to be one more leg down. This is also probably climactic. When you get a bar like this, 60% chance it's the end of the trend, and 60% chance you're going to get one more leg. So you can see both of those things were true here. It was essentially the very end of the trend, and you got one more leg. Bad follow through on 15. This is mostly due to bears buying back shorts, so don't be mistaken and buy above 15. You can see on 16, bad follow through for the bulls who bought above 15. You can also see that bears who sold below 14, disappointed 15, are getting out around 16 on break even. That's what's causing the rally on 17. We get outside up on 17, but it looks very sideways. I'm thinking that we're forming some sort of final flag. And 18, it's a tight trading range. Breakout of the tight trading range to the downside is probably going to fail. And you can see on 19 and 20, we started to get follow through, big tails on the bottom. So this is likely to end up as a final flag, and it did. Bears buying back shorts, causing 21. Disappointed in how 20 closed, most likely. 22, an attempt at a low one, but never triggers. And you get big follow through for the bulls on 23. This is a problem for the bulls. In general, these closes aren't the best, but they're probably a little stronger than bears want. So this whole thing is suspicious. And then 23 is such a big bull close. It has a lot of traders wondering, how high are we going to go? Another important thing to note is the bulls who bought below 8 are not out at break even yet, and they probably should make money. So while we've rallied up to here, we are probably going to get to here. But you have to keep in mind, we've had almost 20 closes directly below the moving average. So, the first close above moving average is probably going to get sold. Bad follow through for 23 on 24. Buyers below 24 to low 2 short. Rally on 25, but it seems like we're just going to end up testing the 23 close, which we do on 27, and bulls disappointed. So some bulls will buy the 23 close, betting it's going to have a second leg, and they're disappointed. You would be too if you bought the close of 23 and 24 and 25 as your follow through. So they're getting out of break even on 27. So bull selling is what's causing this bear bar to close near its low. It's a potential wedge, 1, 2, 3, but I think that with how strong 23 is and how decently strong 26 is, you're more likely selling the bottom of a trading range than anything else. So that's why you get disappointing follow through on 28 and a big bull bar on 29. 29 is interesting. I can understand kind of why it's tempting to buy, but it's the top of the bull channel. It's breaking out of the flag. It's trying to create some sort of breakout of this bear flag and get a measured move. You can see we got essentially below 2 here. So it's trying to get a measured move up over here, which in fairness, we did. But you have either, there's a lot of problems with it. You have to be aware that this was a really tight channel and it's probably going to get another leg down. And we're probably not just going to rally straight up. If you're thinking about, bar 29, do you think that we're just going to see another big bull bar closing near its high? Usually not in this context. So bad follow through on 30, which isn't very surprising. And 31 is a double bottom. Again, it's a breakout attempt. You can see its bulls are attempting to break out of this bear flag. You should be pretty bullish at this point, looking because with how strong this has been. Again, this is how I think of trading range days. If you start to get a sell off during the day, you should be thinking really hard about whether it looks like the start of a trend or it looks like a leg in a trading range. Because if it looks like a leg in a trading range and you start getting strong bull bars, buying down here means you're buying low in what is probably a trading range. So fall through 34, 35. It's okay, but I was just thinking this was a pretty tight channel and we were probably going to get another leg. And I didn't think we were just going to go straight up and rally. I thought we were going to get some sort of pullback. Disappointing follow through on 34, but that's kind of what happens in channels. Tight channels are often, disappointing for stop order traders and difficult to trade. Bad follow through on 35, good bull bar 36, and wedge top on 37. One, pullback, two, pullback, three. There's a lot of ways to look at it as a wedge. You could look at it as consecutive wedges. So one, two, two-legged correction, and then complex three, and then one, two, pullback three. There's a lot of ways to look at it. But the important thing to note is that it's a tight bull channel. So don't sell 37. Just wait, in my opinion. And that's one of the reasons why you get kind of bad follow through on 38. It's because there aren't a lot of bears here looking to sell. Additionally, bulls know other bulls will exit below here, so they're buying the close of the bar, trying to get it back to the 36 close. So any bulls who bought the close of 36, disappointed 37, can get out around break even. That's what causes the sell-off. 39, 40, some follow through for the bears, but we're probably getting back to the 38 low. 41, 42, this isn't a big enough bar to flip the market to always in long. I think we're back to always in short somewhere in here, but this isn't a big enough bar to clearly flip the market to always in long. So don't buy above it. Not surprising you get bad follow through 43, 44, and then you get a big bull bar closing its higher on 45. I think 45 is enough to flip the market to always in long. And while this is a tight channel and it might get its own second leg, it could just be a second leg from this. And so it's okay to buy above 45. When you get 46 as follow through, I thought it would be okay to exit below 46 if it triggered, but you can see it never did. Because if you think about your premise, it's true we might just dip down to the 44 high and those traders will get trapped, or they'll be buying back shorts pretty quickly and that'll cause a rally. But also a lot of times if you get this, you're just going to kind of get a bear bar that's really no fun. Something like, I don't know, like this, like after that, you might get a rally into the end of the bar. But the reality is if your follow through is bad like this and it trades below, your premise isn't valid. What are you saying when you're buying above 45? What are you actually saying? What you're saying is, I think it's a bull trend. I think this is a major trend reversal. I think we got a trend line break, a pullback, and a higher low major trend reversal. And if the follow through for 45 is this, and then this or that, does that scream, a bull trend to you? No, that screams trading range. This is just a trading range. And so if it trades below here, you're risking that. And so I would just get out. And worst case scenario, you get something like this. If you get out below here, you get something like this and you can just buy again because then your premise is valid if you get another bull bar. But the reality is on 46, if it trades below it, your premise of a bull trend isn't really valid and you need more information again. So it's better to wait. And bulls know that, so they're buying the low in the close of 46, trying not to let it trigger. You can see they were able to do it. Something else to note is there are bears who sold. The wrong tool. There are bears who sold above 44 and they got trapped on 45 and they're not out at break even and they're trying to get out, but they're not able to. And when they see 48, they just give up above the bar. Sorry. When you see 48, those traders give up above 48 and that will cause such a big rally, 49, 50, 51. If you buy above 48, it's a mistake to have a stop directly below it. You need to have a stop below here because when you get inside bars, sometimes it'll trade below and then do this, exactly what it did. So you do need to keep your stop below here. Stop below 48 is a mistake that's going to get run a lot of the time and then go your way and it'll be disappointing. And if you did put your stop below here, once you get stopped out and starts to rally, you have to buy again above 48 as it goes outside up. And a lot of traders are going to be too, disappointed and frustrated to do that. So, like I said, trap bears, causing the rally on 49, 50, and 51. Not surprising we got a bit of a pullback at the top of a potential sell climax on 52 and 53. I was long, and I had my stop below 51 since I was just trailing it below bull bars. And I ended up getting stopped out on 53, which is fine. I just bought again above 54. And that's what you have to learn to do when you get trapped out of a trade. So like, let's say, you bought above 48 and you get follow through on 49 and 50. And then you start to think that we're going to get a pullback, because that's true. We are likely to get a pullback. And you end up getting out below like 52. The next time you see a bull bar closing on its high, if it's still always in long, you need to just buy again. If it's still always in long, just look to buy again. And that's essentially what happened on 54. And I think that's one of the reasons it was okay. 55 was a big bull bar. I'm not surprised we got it. We need to get back to the one low. So you can see 55 let those traders out. And then we got a big bear bar 56. I think 56, you need to get out below. 54 and 55 are strong enough to probably get a second leg up, but 56 is pretty disappointing. And so not surprising. Not that surprising there are buyers below, but in reality, in general, probably going to be a trading range here. You can see if you bought the close of 56, how do you feel? Sorry, 55, how do you feel when you see 56? You're disappointed in 56. And so when 57 and 58 rally to the close of 55, that's where traders sold out. We do end up getting a high 2 on 60 and surprise vacuum test of the high of the day on 61 and 62. I thought you could buy above 60, but if you're buying above 60, this is pretty much what you need to see, and you need to see it fast. If it doesn't go your way really quickly, I would probably just get out of the trade. So 61, 62, good rally. You can see we filled the top 63, and we formed 3 pushes into the end of the day. So essentially a wedge pullback. So maybe, bulls in the morning, assuming there was no gap. Bulls, in the Globex session are going to be looking for, some sort of double bottom and a retest of the highs. But you can see we already got a retest of the highs. Same here. Same problem the bulls had here. Any bulls who bought the close of 62, how are you feeling on 63? You're disappointed. So they're getting out at break even right over here on 67. On the daily chart, we have an II pattern. It's a bull close on SPY. It's a bear close on the Emini, but I look at the SPY daily chart, so I'm seeing it as a bull close personally. When you get an inside pattern, it's the market contracting. Think of the market as a spring, and it's contracting, and it's gonna, explode. It's gonna break out in some way. So don't be surprised. Tomorrow's also Friday, which is the last day of the week, so bulls looking to change the appearance of the weekly chart. But don't be surprised if we get a big bounce tomorrow once we trade above here. It's possible that it immediately fails and just breaks out to the downside. When you get an inside pattern, it's generally a 50-50. So there's a 50-50 chance the first breakout fails. So pay a lot of attention to tomorrow. If we trade above, the high of yesterday, and we just start to get a couple good bull closes, we could really rally. And if it starts to fail at yesterday's high and then starts to turn down, there's potential we get an outside down day tomorrow. So I would pay a lot of attention to that. On the weekly chart, if we do start to rally, bulls are going to look for the open of the week, which is here. And I'm just going to go back to the daily chart for a second. So yeah, don't be surprised if we rally up to here, because this is the open of the week, and bulls are going to want to get there. And if we do get there, bulls will be hoping they can get a bull close and maybe turn this whole thing into a bear trap. And, the first target for them is probably this low, where limit order bulls bought below here, and should make money. Yeah, that's pretty much it.